Ladies and gentlemen, good day and welcome to the Pondy Oxides and Chemicals Ltd Q1FY27 earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this call is being recorded. I now hand the conference over to Ms. Sana Kapoor from Go India Advisors. Thank you and over to you, ma'am.
Thank you, Shruti. Good afternoon, everyone, and welcome to Pondy Oxides and Chemicals Limited's earnings call to discuss Q1 FY27 financial performance. Today, we are joined by Mr. Ashish Bansal, Chairman and Managing Director, Mr. K. Kumaravel, Director Finance and Company Secretary, Mr. R.S. Vaidyanathan, Executive Director, Mr. Vijay Balakrishnan, Chief Financial Officer, and Mr. Prateek Gupta, Associate Vice President, Operations. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. May I now request Mr. Ashish Bansal to take us through the company's business outlook and financial highlights, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Sana. Good afternoon, everyone, and thank you for joining us for POCL's Q1 FY27 earnings call. I hope you had the opportunity to go through our financial disclosures available on the exchanges. I'll walk you through the key strategic updates, operational progress, and financial performance, followed by a Q&A session. We have started FY27 on a strong footing with Q1 FY27 revenue, EBITDA and PAT growing by 56%, 30% and 32% year-on-year respectively. I'm pleased to share that our copper vertical continued its strong momentum in Q1 FY27, achieving the highest ever quarterly production and sales, with both volumes increasing by more than 3 times on a year-on-year basis. These results reflect the strength of our integrated business model, our focus on value-added products, and our commitment to delivering sustainable and profitable growth. Before turning to the financial performance, I would like to highlight the key strategic initiatives that have supported a strong start to the year and are strengthening the foundation of POCL's long-term growth and value creation. Our copper expansion project continues to make encouraging progress. We are establishing a 36,000 metric ton per annum copper cathode facility at our Thervoykandigai plant in Tamil Nadu, with a total investment of approximately INR 200 crores, fully funded through our internal accruals. We have already incurred around INR 25 crores towards the project, and execution remains on schedule, with major equipment orders finalized and key construction activities underway. The first phase of 18,000 metric tons per annum is on track for commissioning by December 2026, with trial runs expected in Q4 FY27, while phase 2 is targeted for commissioning by Q3 FY28. This project marks a key milestone in strengthening our non-ferrous portfolio and expanding our value-added copper vertical. The facility will leverage integrated pyrorefining and electro-refining technologies to produce LME-grade copper cathodes, further enhancing our vertical integration capabilities. Upon commissioning, the project is expected to improve our product mix, enhance margins, and drive profitability through value-added copper products. It will also create operational synergies, support import substitution, increase the use of recycled copper, and further reinforce our commitment to sustainability and long-term value creation. The incremental 6,000 metric tons per annum copper recycling capacity commissioned in Q4 FY26 has ramped up well and is expected to achieve capacity utilization of approximately 75% through FY2027. These investments will strengthen our copper vertical, enhance value addition, and support our long-term growth strategy. CRISIL has upgraded POCL's outlook to A positive from A stable, while reaffirming its credit rating, recognizing its strong balance sheet and sustained financial performance. Building on these strategic developments, our operational financial performance in Q1 FY 2027 reflected the resilience of our business and disciplined execution across the organization. While net production and sales volumes moderated during the quarter, it was a conscious strategic decision to prioritize value-added products amid supply chain disruption and production constraints that enabled us to achieve our highest ever net EBITDA per ton of INR 21,595. Copper production and sales volumes increased by more than 3x year-on-year in Q1 FY27, supported by the ongoing ramp-up of the additional capacity. The segment delivered strong profitability, with copper EBITDA per ton rising 66% year-on-year to INR 48,488. Copper is expected to contribute approximately 45% of our overall revenue in FY27 as capacity ramp-up progresses. Coming to financial performance for Q1 FY27, revenue growth remained robust during Q1 FY27, with revenue increasing to INR 931 crores, registering 56% year-on-year growth. The overall sales mix between domestic and export markets stood at 55% and 45% respectively. And between the lead and copper verticals, the export mix stood at 55% and 25% respectively. Within the lead vertical, value-added products accounted for 85% of the segment revenue, reinforcing a strategic focus on increasing the share of higher margin products. EBITDA and PAT increased by 30% and 32% on a year-on-year basis to INR 56 crores and INR 36 crores respectively. In Q1 FY27, EBITDA and PAT margins remained strong at 6% and 3.9% in Q1 FY27. On a consolidated basis, the same momentum continued with revenue, EBITDA and PAT increasing by 55%, 33% and 43% year-on-year respectively, driven by higher volumes, improved product mix and enhanced operational efficiencies. As we move forward, we remain confident in our long-term growth journey. Our target 2030 roadmap is focused on delivering over 15% volume growth, 20% plus CAGR in revenue and profitability, EBITDA margins above 8%, ROCE exceeding 20% and deriving over 60% of our revenue from value-added products. The ramp-up of expanded lead capacities, ongoing copper capacity additions, increasing contribution from value-added products, forward integration initiatives, and our continued focus on operational excellence and sustainability position us well to deliver profitable growth, enhance shareholder returns, and create long-term value for all our stakeholders. Thank you for your continued trust and support. I would now like to open the floor for questions. Over to you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Dheeraj Ram from 361 Capital. Please proceed.
Hi, sir. Thank you for taking up the question. Sir, you've guided in last quarter for around 1.25 lakh tons to 1.3 lakh tons of lead volume sales for FY27. So, based on current quarter's run rate, do you expect another maybe 1.1 lakh tons of sales for next 3 quarters, or do we see any revision of this?
Good afternoon, Dheeraj. This is, as you're aware, the whole supply chain issues were getting, through the quarter they were a little, constrained, and that is the main reason. And we hope to achieve and catch up to the volumes, but we'll have to see how the whole supply chain pans out over the next 1 or 2 months. And we are confident at least we will be able to close up to the numbers that we had committed over the last quarter.
Okay. And since you're importing majority of copper scrap, but copper has seen very good growth while there's only problem in lead in industry. Could you explain briefly on why is this only being facing in lead recycling while not in copper?
It is more of the regional placement. So of course we are also importing copper, but the copper material coming across from a few other locations as well, and copper has just started. So when you look at the volume growth, you look at multifold growth, wherein lead already being at very high volumes, you see that differential not showing as much. So it's more of a locational advantage, little bit to do with the supply chain from the kind of countries that the copper scrap was imported from.
Okay, got it. And do you see any these difficulties or challenges being relaxed as of now, or do we see this increasing going forward?
As of now, it is status quo, and I'm not too sure, but I don't think it looks like it should increase more. But as of now, I'd be a little early to comment on the same.
Okay, and last question, sir. What is our capacity utilization for our new 72,000 ton TKD plant of lead? And what is the one for 6,000 tons of new copper plant that you commenced last quarter?
On the TKD new capacity, because here we mainly do more of our pure lead product, so the capacity utilization is below 50%. And as you're aware, we had concentrated more this quarter, having lower volumes to keep up the margins more on the value-added part. So almost 85% of our production has been from the value-added production. Hence, the new facility, the capacity utilization has been little low versus the other unit has been a little higher. In terms of copper, almost 75% of the capacity is being utilized on the additional capacity added.
So just a follow-up, this 75% that you're saying is on the new capacity that commenced in copper?
Yes, including the old and the new, 75% overall is being.
Okay, overall. Okay, thank you, sir.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and one to ask a question. The next question is from the line of Sagar Shah from Spark Capital. Please proceed.
Yeah. First of all, thank you for the opportunity. Sir, my first question was just a follow-up on the previous participants on the lead utilization. I understand that the lead utilization is low because of the difficulty in getting the scrap as well as in sales actually. But I wanted to understand, is there a softness in the demand as well? Because we are not exposed to Middle East. We are more exporting to the European countries. So is there a demand slowdown as well as in the western part as well as what we have seen in the Middle Eastern region?
So basically, first of all, our exports are not to the European countries. They are predominantly more to Southeast Asia and the likes. And in terms of what you call demand softening, no, there's no demand softening, but there has been only supply chain delays because of which the whole issues have been, volumes have been lower and all of those.
Okay, so when do you see the demand on track, at least in H2, or will this softness in demand continue in FY27 or late?
Like I said, there is no softness in demand. There is a gap in supply because of delay in shipments and the supply chain disruptions. But overall, the demand is intact.
Okay, fine. So my second question was related to our cost pressures, sir. The other expenses were up 16% YOY and 44% sequentially. So is this only because of this increase in the freight forwarding costs, in the increase in the logistics cost, or is there something else also in this one?
Logistics is is a small part of increase, which is a part of it, definitely, yes, but that does not contribute to the major part. The major part is contributed by the fuel prices and a couple of additives prices that have shot up in the last 3 months. Hello?
Thank you. The next question is on the line of Naman Parmar. You will proceed, sir.
Yeah, thank you so much for the opportunity. So firstly, I wanted to understand that the current quarter you have attained the highest ever realization and EBITDA per ton on the lead side. So what you will be guiding for the lead EBITDA per ton and the realization going forward? Or it's a one time only?
See, this quarter, this is Vijay. So this time our value-added mix was about 85%. So as we said in the past, whenever we do more of value-added, the EBITDA range will be around 19 to 21,000. So since predominant portion of this lead volume comprises of value-added, we achieve this volume. But moving forward, when the volumes increase, we will be able to retain the sustained EBITDA level of about 18,000 to 20,000 rupees per metric ton. That is a sustainable level of EBITDA that will be maintained.
What you said, 17 to 18 you will be sustaining EBITDA.
That is the number what we have had, 18 to 20,000 rupees per metric ton EBITDA levels. That is a sustainable level which we can, attain moving forward.
Okay, got it. Secondly, on the copper side plant, how is the CapEx going on and what will be the outlook like? It will be starting your 18,000 ton metric ton. It was expected to start in the September, right? So how is the CapEx going on that side?
So correct me if I'm wrong, your question is, what is the CapEx that's already been done on the copper part? And if, you are thinking it's September month, will it start in September? Is my question right? Am I understanding?
Yes.
So currently, all the machine orders are in place and they're almost ready for inspection. We have spent approximately 25 crores out of this thing, and the further part of spending will happen in this quarter. Our commitment on starting the trial production was December 2026 and not September 2026. September 2026, the machine installations will start around September end and will take about October, November for the machine installations and the trial productions to happen in December, and which is on track.
Okay, got it. And lastly, if you can give the what volume you are expecting on both the lead side and the aluminum, lead and the copper for the 27 and 28.
We'll revert with those volume guidance shortly in the future, yes, on these.
Okay, thank you so much.
Thank you.
Thank you. Before we proceed for the next question, we would like to remind participants that you may press star and 1 to ask a question. Participants who wish to ask a question may please press star and 1 at this time. The next question is from the line of Kush from GeoG CMS. Please proceed.
Yeah, hi. Thanks for the opportunity. I just wanted to understand how much of the sourcing is coming from the Middle Eastern trade routes, because it is not just you, it is the whole industry that has highlighted to the supply chain issues. So that would be helpful.
Our Middle Eastern procurement is well below 5%, but the issue more than the Middle Eastern procurement is the supply chain in terms of the shipping route that is through the Hormuz and all of those which are getting delayed. So that is the main issue, and because of which the whole delay is happening.
Sure. And if these delays persist because of the XYZ reasons, how do we trying to mitigate it?
We are looking at alternative sourcing as we have, and we have already started working on it from our Southeast Asian and other South American and other region suppliers, and we are trying to push for more supplies from these regions.
Okay. But then that would be at the similar pricing that you are buying right now, or it could be at the higher end?
Technically, it should be at a similar pricing, but it all depends again on the inward freight costs and all of those. So we'll have to see as the material starts being offered.
Got it, sir. And in terms of the plastics and aluminum division, where are we in terms of what is the ramp up, etc. over there?
So plastic division for this quarter, it has turned profitable. We have achieved about 15 lakhs in terms of profit, net profit. So we did about 800 tons approximately, and we are preparing for doing value additions in the quarters to come. With respect to aluminum, we are doing a small quantum, about 200 metric tons. That is what is the production right now in terms of both these verticals.
Got it, sir. And one last question. For the full year, what should be the expected value-added mix for lead? Because this quarter it was extremely high at 85. I'm sure as things improve, it would come down. So what would be the sustainable mix of value-added for lead?
Yeah, annually we are looking at around 65 to 70% on the value-added mix.
Okay. Got it.
Last year was at about 63, and this year we are expecting and targeting around 65 to 70.
Sure. And in Q1FY26, how much it would be?
85%.
No. Last year,
You're talking about last year. Last year was about 55% approximately.
Oh, okay. Okay. So it's a huge. Got it. Got it. Thank you so much. Thank you.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and one to ask a question. To ask a question, please press star and one now. The next question is from the line of Pawan Kumar from Global Confident Research. Please proceed.
So thank you for the opportunity. My most of the questions have already been answered. So one last question is on the CapEx side. The guidance that you have alluded to was rupees 175 crore for the financial 27, which you have already disclosed in the investor presentation. So out of this 175 crore, can you please break down that how much is the growth CapEx and the maintenance CapEx out of this?
The current 25 crores is for the fresh CapEx that has already been spent. Out of approximately that 175 crores, the maintenance CapEx will be in the range of 20-25 crores, and balance from 140 to 150 crores will be for the copper new plant addition.
Okay, sir. Okay, sir. Thank you, sir. That's all, sir, and best of luck for the future.
Thank you. Before we take the next question, we would like to remind participants that you may press star and one to ask a question. The next question is from the line of Aditya from Raya Asset. Please proceed.
Hi. Am I audible, sir?
Yes.
Thank you. Thank you for the opportunity, sir. I just wanted to understand on copper, like as we are ramping up our copper capacities, from sourcing point of view, I mean, how should we think about copper scrap security? I mean, we are seeing that global supply is tightening, especially on the copper side as well, and more countries are looking to keep more of scrap within their boundaries. So are we seeing any kind of sourcing problems, especially on the copper side going forward? And what is our take on that?
So currently, most of our copper sourcing is on imports, and little more diversified different countries than where we are doing our lead predominantly. But we are also looking at copper from domestic sourcing, which would contribute about 25 to 30% going forward. And a lot of which we have also started looking at it currently. I mean, it has to be, I mean, the sourcing model for scrap going forward will have to be extremely dynamic in terms of being able to quickly switch over to domestic and versus imports. So it has to be a dynamic function of the whole process. And as we go forward, we'll have to keep making it stronger.
Oh, that's very helpful. Just on the lead side, we understand that it's not a demand issue right now, but majorly a sourcing issue, like we are facing supply chain issues because of this Middle East crisis. But if this crisis persists, say, for the next 1, 2 or 3 months, how are we planning to source our scrap on the lead part? Because again, our lead imports are quite high.
See, it is this, when we say sourcing, it is more of the shipping delays and all of it, which is happening. And already we have started looking into other regions like the Southeast Asian region and little more on the domestic part of it. And going forward, I mean, the specific shipping routes will have to be avoided. So because of which there could be the sailing time would be a little longer, and maybe a little impact on the pricing in terms of raw material overall. But I mean, it will find its balance in the due course. I mean, it's not going to be perennial.
Got it. Just one small follow-up on that. I mean, does that lead to working capital? Sorry.
So whenever there's a war, post-war, the scrap generation is also at multifold due to all the calamities that's happened during the war.
Thank you, sir. Just a quick follow-up on that. I mean, with routes being elongated, does that stretch our working capital also? I mean, do we see that kind of working capital being stretched at least for next 1 or 2 quarters?
No, our working capital is not stretched if you look at our current numbers. Our payment cycle is when the material arrives closer to the port, that's about a week before the arrival of the material. So that still stays in place. So that has not impacted our working capital cycle.
Thank you, sir. That's very helpful. Thank you.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and one to ask a question. The next question is from the line of Jigar Jani from Nuvama. Please proceed.
Yeah, hi. Thanks for taking my question and congratulations on great numbers in a tough environment. My first question is on the copper EBITDA per ton. If I recall rightly, I think last quarter you had guided for 35 to 40,000 on a normalized basis before the value addition kicks in. This quarter again we have surpassed last quarter EBITDA per ton in copper. So what kind of guidance would you like to provide before value addition for the copper EBITDA per ton for the full year?
Thank you. You're exactly right. We had guided at 35 to 40,000, but with our increased capacity right now from 6,000, with the addition of 6,000, we are able to get little more efficiencies back into our operations and translate that into the sales pricing, and also because of good amount of volumes, we are able to compress a little bit on our the working capital cycle in terms of overall cost. On that basis, we were able to bring down by a couple of basis points. And in addition to that, currently in this quarter, we also had a little run up due to the demand situation in terms of availability. So we are able to get little more premium on the selling side on copper. But nevertheless, looking at going forward margins on this, we should be able to do in excess of 40,000, which mainly is driven through the efficiencies that we have gotten through our increased capacities and some machine additions and all of those. So we can safely guide above 40,000 would be for the part which was earlier 35 to 40,000.
And sir, on volumes also, I think we had guided 12,000 tons for copper. Again, first quarter we have done about 4,000. We are already at 75% utilization. So can we expect some more ramp up in this, or should we expect that like 4,000, 4,500 should be the run rate till the new capacity kicks in?
Yeah, so we will have our new capacity kicking in the last quarter. So definitely the last quarter we will have the capacity benefit of the new capacity coming in as well. Till then we will be pushing hard on the existing capacities, whatever we have, and see what maximum we can do.
Understood. And sir, lastly, just a question on copper. So right now, when we say copper cathodes, right now, till what stage do we do the scrap processing? Do we just do the ingots, or do we do the anodes also as of now? Just wanted to understand where.
Anode is a part of the new project that's coming up. So from the scrap processing to anode to cathode will be a part of the new process that comes. Currently, we are doing the basic pre-processing in terms of shredding, chopping, sorting, and a small amount of melting as well into some remelted, kind of an ingot or a billet. But majority is pre-billet condition, pre-melt.
So when we target Q3 FY27 18,000 tons, that will be till cathode and not till anode. Is the understanding correct?
The installed capacity, what we are establishing for 18,000 tons, will be till the end product cathode.
Understood. And sir, lastly, any plans that you have formalized on forward integration from copper cathode into bus bars, wire rods, or any value-added products that you are looking at as of now?
We are on the way of finalizing, but right now we don't have a confirmed product which we will be announcing. So closer to as we get to our final production stages on the cathode, we will come out and announce our further plans of forward integration.
Sure. And lastly, any update on lithium ion, or we are still at pilot stages there?
Sir, Mr. Vaidhi will speak a little more on the lithium ion.
Yeah, hi.
we are still, since the industry is still evolving, we are still contemplating and working with some strategic technical partners. Because predominantly in India, only the LFP chemistry is available, and wherein the recovery extraction is about 1.5 to 2%, and rest, the iron phosphate is not of much demand and much value. So we are just monitoring the entire the feedstock arrival and the other challenges like the evolving technology and other stuff. So once we convince ourselves in terms of what to and how to go about it, and we will surely let all of you know about it. Yeah.
Okay. Thank you so much and best of luck for future. Thank you.
Thank you. To ask a question, please press star and one now. The next question is from the line of Saransh Gupta from Swan Investment. Please press.
Yeah, thank you for the opportunity. I hope I am audible.
Yes, you are.
Yeah. Sir, I wanted to firstly understand, like in this quarter, our value-added mix was 85%, and that has been the historical high, I believe. So, was this due to the supply constraints, or did our customers, was this because of our customer demand?
So basically, when we had some supply constraints, so we did discuss with our customers where we spoke to them and insisted, because their customers who take the value-added products are specifically dependent on specific suppliers for value-added products. So we requested them if they could take the basic pure lead and other products from elsewhere and take the value-added products from us. So, and we were able to convert those into the orders. So if you see, basically our value-added products have been sold as they were in terms of volume, but since the pure lead volume did come down, so the percentage is at 85%.
Understood, sir. Just a follow-up on that, like assuming the similar situation continuing in this quarter as well, do our customers have the bandwidth to accept more value-added products in the lead segment?
I don't get the question. You mean bandwidth to accept more in the sense?
So like in this quarter, we did 85% of value added, which helped us achieve an EBITDA of 21,500 something. So do our customers have the requirement of additional value added products in this quarter as well? Or because I believe that yearly there is a certain demand that has to be met for value added, and post that we can supply only alloys to them. Yes, sir. Sir, I just wanted to understand, like, how conveniently we can shift our value-added mix that helps us attain higher EBITDA per ton. As in your answer, you said that this was a one-time event that because of supply chain issues, you requested your customers to take higher value-added products.
No. Again, I'll explain the same thing to you. We did not request our customers to take a volume of value-added products. We requested our customers to take the basic pure lead product from any other supplier, because that's more easier to procure, whereas value-added products are supplier specific. So when our volumes of the pure lead drop, in totality, if you see the percentage, it was 85%.
Understood.
So we concentrated to see that we don't drop the volume of the value-added products from where it is, and rather drop the volume of the lower profitability products, and continue with whatever best we can do in the amount of raw material that was available at that point in time.
Understood, sir. And just one last question. In the last Concall, I guess there was some receivables around 110-15 crores that we had to receive in April. So what's the status on that? And
that was received then itself. It was saying that it was received on April 5th itself. During the Concall, it was told the negative cash flow was due to there was a vessel delay which moved, it was supposed to be around the last week of this thing and moved to April 1st, 2nd. Hence, we received that payment on April 5th, and that's what showed the cash flow to be negative. But that was received on April 5th.
Understood. Sir, so what's our, at the end of the quarter, what is our working capital cycle?
Currently, we are at 46 days. This is 53 days earlier.
Great. Understood, sir. Thank you so much,
And
and
with
all
a
the best.
positive cash flow as well, yeah.
Yeah. Thank you, sir. Thank you so much.
Okay.
Thank you. The next question is from the line of Dave from iThought PMS. Please proceed.
Yeah, thank you for the opportunity, sir. So, I understand that by end of this financial year, we will be having 12,000 metric tons of copper recycling, 36,000 metric tons of copper cathode. So how much of this we will use captive recycled copper for the copper cathode, and the balance amount where we'll be sourcing our copper pre-melt from? Because I wanted to understand in different scenarios, what could be our margins and what could be the EBITDA per ton. Like when we are doing copper cathode from own pre-melt and when we are doing copper cathode by sourcing it from outside.
So by the end of this financial year, we will have an installed capacity of 18,000 metric tons of cathode, and by Q3 of next financial year, we'll have the balance 18,000 on stream. We will be using almost close to 70-80% of our in-house recycled material. Basically the idea of using in-house will be the lower grade will be used for our production, and the higher grade will be sold off as it is, because on the higher grade of scrap, as much value addition will not make sense. So, that kind of a processing cost, everything. So that will be sold as of. Apart from that, we are tied up for sourcing of various other kinds of copper scrap that will be used for this cement. The blend, what we had guided was a blended margin profile on this should be in the range of around 60,000-65,000. As of now, we still hold the same until we start, and of course, as we start and we go through a couple of months, efficiencies will definitely kick in. So we are sure that we will be able to increase the number on that, but a bare minimum of 60,000-65,000 per ton will be achieved on this cathode part.
Got it, got it. So sir, since we have like higher copper cathode facility, are we also like planning to increase our copper recycling facility for the backward integration? Around 12,000?
We most probably will, but we will look at it at that point in time based on the raw material mix that we wish to push in for our production.
Got it, got it. Sir, next question was on the lead side. So given the disruption that we have seen in the current quarter on the lead, but still our sourcing mix was like 97% for international. Any specific reason that why we didn't go for more domestic sourcing despite the disruption in the international channels?
Yes, the domestic pricing, because the domestic market understanding that there is a delay, the price delta was so high that if we had gone in for more domestic sourcing, our overall profitability in terms of per kg EBITDA would have drastically dropped. So it did not really make too much of sense to push in to go for domestic sourcing and wipe out the profitability as well.
Okay, got it, sir. Thank you so much. All the best for the next quarter.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. In order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is on the line of Darshil Zaveri from Crown Capital. Please proceed.
Hello. Thank you. Good evening for taking my question. Firstly, congratulations on a good set of performance in a very challenging environment, sir. So just wanted to know, a lot of my questions have been already answered. So just on the lead side, sir, like are we still seeing that big supply chain issue right now happening? Will it hamper our Q2 as well? Because the war doesn't seem to be getting over anytime soon, and even if it does, the shipping lines might not, come to full force right now. So, what would be your, outlook and view on the current Q2 happening, and as well as like if we have to hit our, guidance of nearly 120,000. So then we would have to do sizably in, H2. So do we have enough capacity for that, sir?
See, in terms of capacity, yes, we have the capacity to do that. And in terms of will it continue for Q2, I would love to be optimistic that it should not continue for Q2. The first month has been a little better than the last 3 months. But hoping that things will be better, but I mean, we have to only wait and watch how things pan out on the supply disruption side as of now. I mean, we might not be able to give you an extremely concrete answer. Maybe another month down the line, we might have more concrete answers, but at this moment, we stay as optimistic that it should end.
Oh, okay. Fair enough, sir. And I just wanted to know, like in FY28, when our full, the new cathode capacity comes in, so what kind of volume are we expecting from copper in FY28? A rough range will also do, sir.
I didn't get your question. We'll be expecting
So in copper, like FY28, like from the 18,000, like what would be the capacity utilization ramp up that we can see, sir?
in FY28, I mean, we are confident we'll be able to utilize over 80-90% of the capacity of 36,000 metric tons.
Okay, of 36,000 we will be able to do, okay, that's it from my side. So thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Swaraj, an investor. Please proceed.
Hello.
Yes, please. You're audible, yes.
Am I audible?
Yes,
Sir, thank you for good set of results. सर मेरा क्वेश्चन ये था, जैसे हमारे कॉपर की अब जो रेवेन्यू में परसेंटेज है वो लेट से ज्यादा हो चुका है. तो जैसे कि जब तक हमारा कैथोड लाइव नहीं आता, जैसे कि आप कह रहे हैं दिसंबर में वो आएगा, तो हमारे जो 2 क्वार्टर होंगे तो उनमें थोड़ा हम जो हमारी बेटा मार्जिन है तो हम थोड़ा कम ही एज्यूम करके चले, उनको थोड़ा सा हिट लेके चले.
किस चीज में मार्जिन में हिट क्यों होगा? इनको एब्सोल्यूट क्वांटम द मार्जिन विल बी मच हायर, राइट?
नहीं, जैसे अभी इस क्वार्टर में हमारा कॉपर का जो परसेंटेज है वो बड़ा है एकदम से, तो थोड़ा सा बेटा मार्जिन पे थोड़ा सा डिग्रो हुआ है.
आप इसको वैल्यू में देख रहे हैं कि परसेंटेज में देख रहे हैं?
हाँ नहीं सर, एबिटा मार्जिन सर.
करेक्ट, एबिटा मार्जिन. आप इसको वैल्यू में देख रहे हैं कि परसेंटेज में देख रहे हैं?
सर परसेंटेज में.
So you'll be happier if it is 9%, but it's still, for example, 50 crores versus if it is 70 crores, but it is only 8%. So you're saying you'll be happier with 9% and 50 crores. I'm just trying to understand.
Okay, thank you, sir.
So absolutely, the absolute quantum numbers, it will be much higher because per ton realization on copper margins will be at cathode level be in the range of about 65,000 versus lead being at 21,000. So accordingly, I mean, if you look at percentage, it will be a slightly lower, but in terms of absolute quantum, it will be much higher.
और सर जो हम अपना 8% का डेटा मार्जिन का टारगेट ले चल रहे हैं, तो वो मतलब कब ग्रेजुअली वो कब तक 8% हम अचीव कर सकते हैं?
We will be able to have a blended 8% by 2030 is what we have given the target, but we are confident we'll achieve much before that.
Okay, thank you so much. That's it from me. Thank you.
The next question is from the line of Utkarsh Somaya from Elco Content Solutions. Please proceed.
Thank you so much, and great set of numbers in this environment where peers couldn't perform. I just had a question now. Once your entire copper capacity comes on stream next year, we should be able to do around 28,000 tons. Now, this is going to be a mix of cathode, which is going to do 60,000 plus, and your base copper recycling. So how should we look at the EBITDA per ton in FY28 for this F28,000 tons, blended EBITDA per ton?
In FY28, we will have the complete capacity of 36,000 metric tons of cathode by itself. So we should be able to do in excess of 30,000 tons of cathode by itself. And most of our recycling material that we generate, almost about 70 to 80% will be internally consumed into the cathode plant, and only about 20% of which would be sold to the outside market. As of now, in the initial feasibility stage, we are guiding on the cathode side approximately 65,000 per metric ton on the cathode, and recycling in excess of 40,000.
And what will be the recycling volumes?
As of now, we are having a volume of 12,000 tons, so definitely that will be fully utilized.
So even in FY28, we can assume 12,000 of copper recycling and around 30,000 of copper cathode.
Yeah, I mean, technically, the 12,000 should be higher by FY28, but as of now, till we don't install the capacity, I would not commit that the 12,000 will be higher. But copper cathode capacity will be 36,000, and we are saying that comfortably we will be selling, producing and selling over 30,000. So I'm only still taking a delta of 20% and speaking that will be at 30,000 tons and above.
Understood. So sorry, I'm slightly confused. So today, our copper recycling capacity is 12,000, correct? And cathode is, you don't have cathode yet. You're going to commission it in December. And in FY28, when your cathode, you do 30,000 volumes, what will be your volumes of your base business, which is 12,000 today? The capacity, it's not the volume, if you can give me.
So like I said, as of now, it's 12,000, unless we add more capacity, which we most likely might add. So until I add, I will not be able to commit, but we will definitely look into the kind of raw material available, and according to that, we will have our processing lines come into place.
Understood. And have you decided on your...
Sorry to interrupt, Mr. Utkarsh. May we request you to join the question?
Okay. No worries. Thank you so much, sir.
The next question is from the line of Hiren Desai, an investor. Please proceed.
Yeah. So the copper recycling that we have is 12,000, and by the end of complete expansion, we will have a cathode capacity of 36,000 ton. Now, 60 to 65,000 per ton EBITDA that we are talking about, will it be on 36,000 ton capacity, or will it be on 36,000 ton of cathode plus 12,000 of recycling, adding up to 48,000 tons? So it will be on 48,000 ton, or it will be on 36,000 ton?
I think sometime back, very precisely the same thing I explained, but nevertheless, I'll explain this once more. So basically, as I explained earlier to another gentleman who asked the similar question, was that the blended margin guidance on the cathode will be approximately 60 to 65,000, but definitely that should go up once the efficiencies come in. And whatever we sell, the recycled product directly without processing into the cathode plant will be it will be above 40,000 per ton. And 80% of our recycled material, which is approximately somewhere around 8 or 9,000 tons, we will be utilizing into our cathode plant. And the balance, about 25,000 or 22, whatever we consume, will be from other scrap that we will be importing. So when you take a blended of these two, it will be in the range of 60 to 65,000, and what is sold outside, that will be an addition of 40,000 plus.
Okay.
Yeah.
Thank you. The next question is on the line of Aniket Gada, an investor. Please proceed. Mr. Aniket, your line has been unmuted, so we are not able to hear you.
Am I audible right now?
Yes, sir.
If you could speak a little louder would be better. It's not too audible.
Okay. So I just wanted to ask a couple of questions. Firstly, our EBITDA per ton for the lead business has been the highest that's been reported, and 45% of our lead business is the domestic market. So has the implementation of EPR credits and battery waste management tools contributed in any way to improving realization margins of customer preference, or has there been a negligible impact in it?
No, but in the investor presentation, they mentioned this quarter majority is imports. So question of EPR credit on domestic purchase is very minimal for this quarter. Probably in the second quarter, we look into it. If the domestic procurement improves, then we can have the benefit of EPR in the second quarter.
And so if that happens, what kind of an impact would have on the margins?
Margin, that will be compensated through the prices. It's less like.
Yeah. So basically, when you buy a domestic raw material, people start factoring in the EPR pricing and all of that, and the raw material prices automatically get somewhere readjusted a little bit based on those factors. So the margin, it just the basic idea of EPR, it just makes it more viable for you to procure domestically and process. And that's how it helps. Maybe there could be a few basis points here and there, better margins, but it all depends on demand supply in terms of availability of material, the pricing and all of those. Currently, the domestic market pricing is higher, even after looking into all the EPR benefits and everything, and hence we did not really push for domestic procurement. And this quarter seems like little bit, the prices are better, so we have already started looking into the domestic procurement.
Secondly, we had some EPR credits available for us, which we did not monetize. Have we monetized them, or are we looking to monetize?
We have not yet monetized that as well. Still have it in our credit.
And last one, the copper cathode plant will be on the same unit where the current copper production is happening, or it will be on a different site?
This will be a different site. It's a new site where the copper cathode plant is being installed. This is in Tamil Nadu. The current copper recycling plant is in Andhra Pradesh.
That's it for me. Thank you for answering my questions.
Thank you. Thank you.
Thank you. The next question is from the line of Neet from Anvil. Please proceed.
Hi, am I audible?
Yes, please.
Hello. Yeah. So my question was like, for the current copper products, I wanted to know our end user industry, and post the copper cathode coming on stream. So will the end user industry be the same, or will it differ? Like currently for lead, it is predominantly autos. So I just wanted to understand for the copper product.
So currently we supply to a lot of wire rod makers, basically the secondary wire rod makers and a few other household wire manufacturers, and the higher grade of copper scrap we supply to a few of the bus bar and other product manufacturers. Once we have a cathode, the cathode can be supplied to the industries which require the highest purity and highest form. Could be your industrial cables, to your high-end electrical applications, to foils, to your requirements for your PCB boards and all of those kind of uses where extreme pure critical purity is extremely critical. So.
Okay. Yeah. And sorry for repeating the question if it looks like, but I have a doubt, like for the 36,000 tons, our 12,000 tons of scrap recycling will also be used. So the volume in FY28 will be like, it will be 36 plus 12, or 36 is inclusive of the 12,000 tons?
Ashish already explained, and again I'm repeating you. For this 36,000 ton, out of 12,000 tons, they are planning to use 8,000 tons for the captive consumption. Balance 4,000 tons is the added to the 36,000 tons. So notionally, sales realization for 40,000 tons per annum, not 48,000 metric tons.
So basically that the blend could change a little bit plus or minus depending on how much of internal recycled material is going to be used for the cathode. As extreme high purity scrap might not be required to re-purify and manufacture the cathode. So those could be sold off at a good value, with a good value and price. So the lower grades will be utilized internally. The higher grades could be sold off externally.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Nakur Gupta. You may proceed with your question.
Hello. Good evening, everyone. So I have basically a major question, like what is the production output for the months of May to July? If you can quantify for each particular month, it will be great.
May to July or April to June?
April to June or April to July, if you want to give July numbers also.
We have given the quarterly numbers. I don't think it'll be possible right away. Maybe we can get back to you with each monthly exact numbers.
Actually, I want to get a point whether there is an upward trend of production or it is just stable around. The numbers are stable as they are in the April month. So can you just help me out with this? The numbers are in upward trend or not?
So as the what do you call the supply issues, I mean, the shipping issues have increased little bit towards the month of May, and for in the initial part of June, the production numbers were a little lower in May and June. And April month, the numbers were good and consistent on the higher side. So on an average blended side, the overall quarter, the number on terms of lead was a little lower.
Okay. So another question I want to ask is, one of your competitor, market leader, has a bit of 10% degrowth in lead volume. But when we see ours is about 25%. So what is the rationale that why we have degrown at a much faster pace as compared to the competitor?
I won't be able to specifically comment on the competitor, but regarding our reasons, we have already given you the reasons in terms of why the volumes are lower.
Okay, sir. Okay, sir. Thank you so much.
Thank you.
Thank you. That was the last question for today. I would now like to hand the conference over to the management for the closing comments. Over to you.
Thank you everyone for joining us today and for your continued interest in POCL. I would like to thank our board of directors for their guidance, our employees for our dedication, our customers for the continued trust, and our investors for their unwavering confidence in the company. If you have any further questions, please feel free to reach out to our investor relations team at Go India Advisors, and we appreciate your participation and continued support. Thank you and have a great day. Thank you.
Thank you. On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your line.